The Federal Reserve is currently losing billions of dollars, whereas they used to have profits that they'd send back to the United States government. This is causing many to be concerned about the solvency of the United States Central Bank, the Federal Reserve, and wondering whether the central bank that prints money might itself actually need a bailout. Ready? Let's dive in. Real quick word from today's sponsor, iTrustCapital. You guys know that I have used and recommended iTrustCapital for a very long time because you can invest in crypto using your IRA. And you can invest in gold and silver using your IRA. This means that whether you want to start up a new IRA and make new contributions to a traditional or a Roth, or whether you have money already in a retirement account that you want to roll over and use to buy gold, silver, or cryptocurrencies, you can do that safely, cheaply, and easily with iTrustCapital. And I'm serious when I say safely because they take security extremely seriously. They never take custody of your assets. They never borrow or lend against your assets. They never let their custody providers do either of those either. They also have an extremely straightforward pricing model. They do not have any monthly account fee. It's 1% for crypto, $50 for gold, and $250 for silver. Given the fact that cryptocurrency is in a severe bear market right now, many people are looking for ways to start buying the dip and getting in at the bottom here, but also people should be concerned about any tax implications that might come along with cryptocurrency gains later on should those assets be worth a lot more. Doing this within an IRA is the perfect way to shield yourself from those tax liabilities. If you do it with a Roth, any contributions that are made are taxed, which means any gains are not. In a traditional IRA, it is the exact opposite. And so IRAs are a fantastic strategy to avoid some of the tax implications you would have in a regular brokerage or a regular crypto account. And because they have assets like physical gold and physical silver available as well, this gives many people the option to invest in these alternative forms of money that normally you would not be able to do in a regular IRA or your 401k at work. So I'm a huge fan of iTrustCapital, using it for crypto, gold, or silver with your retirement money. And if you use my link in the description below, got a little bonus waiting for you as well. Over the past few years, central banks all around the world have been in quantitative easing mode. They've been in the mode of printing money. Now, central banks don't directly print money and then just hand it out to people. What they do is they print money to buy assets. Now, primarily, this is buying government bonds, which means that central banks print money to give to the central government so that the central government can then spend that money and hand it out to people. So central banks are in the business of funding government expenses. However, that's only when they're in quantitative easing mode, when they're in debt monetization mode. And the problem with that is you do that enough and then you get inflation. And that's exactly what we've seen over the last few years. They just printed trillions of dollars, gave it to the government spent that money into existence. Now prices have gone up. So the central bank, the Federal Reserve, being the entity that is tasked by Congress to control prices and maintain stable prices to not let inflation get out of control, they're now having to do the opposite, which is quantitative tightening. That means they are selling assets off their balance sheet and they are not rolling over as many bonds as they used to. This means that the government is no longer getting free money from the central bank, and borrowing for the government is becoming more expensive as a result because they don't have a money printer who's willing to lend to them at extremely low interest rates. The other side effect of this is that as central banks like the Fed raise interest rates, they have to pay out more to banks on reserves held at the central bank. As you can see here, that is one of the key roles of a central bank, is that they pay out interest on the reserves that commercial banks park with them, and right now they're paying out more on that as they raise interest rates. Further, it means everything that they bought previously when rates were lower are now worse prices. They've taken a hit on the value of those assets by their own doing. They've caused those prices to go down by raising interest rates. From this chart here, we can see that central banks bought a lot of bonds and they are worth a lot less now than they used to be worth. The ECB, the Bank of England, the Fed Treasury, treasuries, they're all worth less right now because they've been raising rates, which has caused the price of those bonds to fall. So when you buy $9 trillion worth of assets when the rates are low and they're at full price, then you raise interest rates, the price of those assets are going to fall. So is there a problem with this? Well, one problem is obviously going to be government funding, because in the past, the Fed had profits on their assets, on their balance sheet, and all those profits after expenses, so profits, get swept back to the Treasury. Again, the Fed holds a balance sheet of $9 trillion. Those are all assets that are paying them money, and then after they pay their own expenses, they're supposed to send the rest of the money back to the United States government. But the Federal Reserve is having to pay so much money out to banks now on the reserves parked at the Fed that they don't have anything left over. In fact, the Fed remittances owed to the Treasury reached a negative $5.3 billion as of October 19th this year. As recently as August, they were still sending positive numbers back to the Treasury. So instead of the Treasury having money that's printed into existence coming to them as income so that they can tax less and borrow less and spend more, now it's the opposite. Now that money is not coming into the Treasury. What does that mean for the Treasury? It means that the Treasury has to borrow more. The federal government has to issue more bonds, borrow more to fund its expenses. If we take a look at this chart, we can see Fed losses. These are remittances due to the US Treasury. This is normally a positive number. This is Federal Reserve profits that they send back to the Treasury. And right now, it's started to get pretty steep in the negative territory. This means that after paying as much as $100 billion to the Treasury in 2021, it might be facing losses of $80 billion, especially if they continue to raise rates. Now, what does this mean when the Federal Reserve owes a negative number to the Treasury? Does this mean that the Treasury is now funding the Federal Reserve's expenses? No. This just means that the Treasury stops receiving income. They get a pile of IOUs built up of how much money the Fed owes the Treasury, and eventually the money will be printed again when the next round of QE and bailouts start, and the Fed profits go back up again, dollar terms, and that money gets sent back to the Treasury. As of right now, all that means is that the money printing spigot is shut off for the federal government. That means the federal government just has to get their income from the two normal places, taxes and borrowing from the economy. It just means they're not getting that free money straight from the Federal Reserve. So, what happens to the Federal Reserve there? They've got losses and they owe money to banks on those bank reserves. Where are they getting it from? They're printing it. That's what central banks do. They've got the monopoly on creating money out of thin air. So they create the money and credit it to the bank's accounts that have banks with them, to the bank's accounts that have accounts with them. Now, this may become a political issue where fingers start getting pointed and saying, hey, the Federal Reserve is now incurring losses after causing a ton of inflation and overprinting and not anticipating the inflation and saying it was transitory, and now it's not transitory. They caused all these problems and now they're losing money and costing taxpayers billions. They're not directly costing taxpayers billions from these losses. They're just printing money to pay the banks. The Treasury is not actively sending money into the Federal Reserve. It just means that the Treasury is now relegated to having to maintain getting its income from the places where it normally gets it outside the Fed, which is your paychecks, your taxes, and borrowing normally from financial institutions. Which is just yet another sign that if a central bank can incur losses of tens of billions of dollars after raking in massive hundreds of billions of dollars in profits, and they still caused record inflation, it's all the more evidence that we need that it is time to end the Fed and get rid of our central bank. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.